But when you talk about institutional investors, for example, a lot different than venture capital investors. But again, if you just think about institutional investors, all they're going to want to talk about is the downside these days. They will talk about what the greatest risks are. If I mention one, Pippa, and I mention plenty because there are always risks, but there are, to your point, there are many opportunities, if not many more opportunities. People rarely want to discuss the upside. They absolutely want to talk about that big boogeyman who's sitting around the corner somewhere. What are your thoughts on that?
Yeah, I hear you. I hear it all the time as well. Well, I've been bullish on stocks now over the last almost 5 years, and I remain so for many reasons. One of them is that we have, what, $20 trillion more in the world economy today than we had when the financial crisis happened. And we know that the central banks have not taken it back. Okay, they might raise interest rates a couple of times, maybe even, oh my God, 4 times this year. Yeah, it's like taking a cup of water out of the Atlantic Ocean. It's not a tightening. It's a barely normalization back to, what would be reasonable levels. Anyway, all that money is sitting there. It's got to go somewhere. And when I talk to the biggest institutional investors in the world, they're saying, I'm in stocks, but I'm not overweight because I was hesitant to buy at the top, right? It's bad luck to be buying stocks at all-time record highs. So every day I hope and I pray the stock market's going to fall 10%, but it never does. So I have to buy on the 2% pullbacks, right? Which is also a bad luck. They're in bonds, and then they have a big whack in cash. But the problem with bonds and cash is now inflation is back. Little bit. Now, I'm not saying it's wild inflation or crazy, but a little bit of inflation is a huge issue for an investor. So everywhere, in emerging markets, in the industrialized world, inflation is now basically burning at your rear end, and it's telling you you've got to get out of cash and into something hard. That's either equities, real economy, or private equity, build a business, or finance the building of a business, and or hard assets like property. And so what I see is a world where actually that money has been heavily sitting on the sidelines, and now it's saying, oh my God, get me out of cash and into something real. All that makes asset prices go up, not down.